Well, thank you.
Excellent. Appreciate you spending some time with us today.
Sure.
Just to give people some little backstory, I reached out to Bill. I'm a shareholder of the company. I reached out to Bill and said, hey, would you mind giving us some insight as to what's going on with the company? He said, well, are you a shareholder? And I said, oh, I'm a shareholder. My wife's a shareholder. Our daughter's a shareholder. My friends and family are shareholders. Yes, we are definitely shareholders. And he was kind enough to say, all right, happy to get on a call with you. So Bill, thanks again for joining us. If you wouldn't mind, if you could just share a little bit about your background with our group.
Sure, I'd be happy to. Specific to the Future Farm company or in general?
Yeah, in general, and also, yeah, both, please.
All right. I am a native of the Boston, Massachusetts area. And when I got out of school many, many years ago, I started to work in the investment industry. I worked for a couple of institutional investment companies. And then in 1990, along with a couple of partners, I started my first company, which was focused on remediating contaminated properties. So we got into the brownfield business. We were in that business for about 5 or 6 years. We sold the company in the late 90s. And I took the proceeds from that company and started a company called Converted Organics. Converted Organics was in the business of processing food waste into an organic fertilizer. We built that company up and took it public in the early 2000s. And as a result of that, I was exposed to different technologies in the agricultural space. So in the mid-2000s, I started to look at indoor farming or vertical farming. And we worked on a couple of different technology plays there. And ultimately designed a system for growing produce in warehouses. And based on that experience, I was approached by a couple of California and British Columbia cannabis growers who asked if we could provide the same efficient system for growing cannabis. So we did some trials, and it turns out that our system worked well for cannabis. And so in 2015, we listed through a reverse takeover on the Canadian Securities Exchange. And now we're just coming up on our 3rd anniversary as a public company in the cannabis space.
Excellent. Thank you for the details. It sounds like you're a bit of a visionary. You started some of those things early on before everyone else jumped on board. So I imagine that's fantastic.
I'll share an observation with you, Jaden. Years ago, I gave a presentation down in New York City to a large group of lawyers, and I was touting the wonders of sustainable investment and investing in an environmentally sound fashion. And this old real estate lawyer came up to me after the presentation and he said, "You are a visionary. You are, this is brilliant. This is genius." But the problem he pointed out was that it's not the visionaries who make any money, it's the settlers. The visionaries and the pioneers all wound up bloody, beaten, and broken. It was the settlers who made the money. So although I've been called a visionary before, I've learned that it's better to be a settler than a visionary. So we're working on being a settler now.
Tell us about that, Bill. What's your plan to be a settler?
Well, we have been focused. If you follow the news releases, you'll see that we've been focused increasingly on hemp. And just very quickly, the Farm Bill of last December has changed the market for hemp in the United States. We were one of the largest growers of hemp in Maine last year. And, Maine has a relatively short growing season, but it is long enough, to produce a healthy crop. And so this year we're expanding our operations up in Maine, and, that is one of the main focuses of the company right now. In addition to the main hemp farm, we have other hemp activities that we're looking at here in the U.S. to include a partnership down in Florida with the Florida Agricultural and Mechanics University. We also have a small hemp farm deal we're looking at here in Massachusetts. And then we have larger hemp opportunities out in California and down in Pennsylvania. So one of the reasons we're focused on the hemp market is that the permitting and the regulatory oversight is less stringent with hemp than it is with marijuana. And the other appeal of hemp is that, unlike marijuana, where you harvest the flower directly, in hemp you can harvest the whole plant, and then you're processing that plant for its constituent components like CBD or CBN or CBG. So it's a lot less demanding from a cultivation standpoint to grow hemp outdoors than it is to grow high quality cannabis indoors. We are still working on several marijuana projects, but are now focusing on hemp as a result of the change in the regulation down here in the U.S.
Excellent. So tell us, what is the, I have on our screen here the link that you sent me for the shareholders as of April 2019. And I'm on the page where it talks about your segmentation of the business. You have marijuana cultivation, processing, retail, hemp, research, cannabis research, and then indoor produce. So I'm curious, what's the blend right now of your verticals, and is there a path to profitability for those?
Yeah, I'll go in reverse order. The produce model is something where we're looking at a couple of locations down here in the States, but the economics of the produce are not as attractive as the economics for hemp or marijuana. By way of example, if we were to grow a pound of arugula and sell it wholesale to somebody like Whole Foods, we might get $16 or $18 a pound. So if you compare that with marijuana or hemp, you get much better pricing for marijuana and hemp than you would get for produce. So our goal with the produce facilities is to find several, maybe 2 or 3 locations where the economics work well, and exploit those opportunities for produce only. And that will probably be in an urban center like New York or Boston. We've looked down in Baltimore and Washington as well. So that vertical, while important to us, and actually, that's the genesis of the company, the economics in the other verticals are much more appealing. The third vertical that we show there is the research activity. And we have been lucky to have partnered with a firm called Rahan Meristem. Rahan is an Israeli agroscience company, and our partnership with them involves research on both marijuana and hemp plants. And that research is designed to breed specific traits or attributes in the marijuana or hemp plant. And that work is something that the Israelis have done with other crops around the world. So if you get a chance to look at the Rahan, which is Rahan, if you get a chance to look at their website, it's certainly worth your time. Very quickly, to give you an understanding of their business model, I'll use one example where they became involved in the breeding of stevia. So stevia is the plant that's used as a sweetener now, and Rahan was able to take the stevia plant and breed a strain of stevia that had higher levels of sweetener or fructose, along with a bitter aftertaste. So they bred that plant specifically for farmers who grow stevia for Coca-Cola. And subsequent to that, they bred another stevia plant that had higher levels of sweetener in it, that had a super sweet aftertaste. And that plant is grown for growers who supply Dannon yogurt. So those two different strains of stevia, having been bred by Rahan, are now used by growers, contract growers. So the Rahan business model around the world has been to take a commodity like stevia or bananas or cotton or sweet potatoes and breed specific strains of those crops, effectively turning that commodity crop into a specialty good. And so our partnership with Rahan is designed to breed those same type of high quality strains in hemp and marijuana for sale to other farmers. And we're building two laboratories with them. The first is up in St. John's, Newfoundland. And the operation in Newfoundland will serve the Canadian market for both marijuana and hemp. And then we're building a second location with them in Santa Barbara, California. And that California location will supply clones only to California until such time as the U.S. allows for the intrastate transport of marijuana or hemp clones. So we're pretty excited in the near and midterm about the opportunities that the partnership with Rahan will bring to us. Rahan currently operates in 12 different countries around the world, and over time, we'll bring that same marijuana and hemp expertise to other countries through our partnership with Rahan. But for now, our focus is on the operation up in St. John's and the second operation out in Santa Barbara. I can tell you that the Israelis much prefer Santa Barbara to St. John's, Newfoundland. I think it has something to do with the weather, but nonetheless, we're pretty excited about that opportunity. And by the way, we're working, we're in the last stages of an agreement with a university up in Newfoundland, another agricultural school. And sometime here in the next month or so, we'll be updating the shareholders on where we stand with them. But that, that whole effort on breeding, maximizing certain attributes in the plant, breeding for specific qualities in the plant, that's an exciting part of what we're doing. The vertical as it relates to growing hemp and cannabis or hemp and marijuana is pretty straightforward. We have already been working with the state of Rhode Island on a permit for marijuana. We have a preliminary application in with the state of Florida for a permit on marijuana. We have existing assets in Puerto Rico, dispensary assets. We're not cultivating down there, but we're involved in some dispensaries. And as I mentioned earlier, our current focus is on some of these hemp opportunities around the U.S. because right now it's a lot easier to permit a hemp facility than it is to permit a marijuana facility.
Mm-hmm. Excellent. Thank you for that detail. And can we talk some finances here?
Sure.
Okay. What's your cash burn rate right now?
We probably, we're probably running at a couple of $100,000 a month. Right now, we'd probably have another 6-7 months available to us. The transition that we're going through as a company is we're now generating additional revenue from these various locations. So, the hemp farm in Maine last year, I don't have the final numbers yet, but we had a pretty good year up in Maine. We will, through increasing our acreage in Maine, we will probably double the revenue for this year. The same with our operation in Florida. We had a good year last year down there, but we think we'll probably be able to double that revenue as well. And then as the dispensaries in Puerto Rico come online, there'll be additional revenue there. And sometime in 2020, I'm not sure which quarter it will be, but we'll be forecasting our first earnings. But again, I'm not sure of the timing of that, but given that the revenue is growing at a pretty good rate, we've been able to keep our overhead under control. I think sometime in the middle of 2020, we'll be able to forecast our first earnings, which, by way of timing will mean it will have been about 3.5 years since we first listed until we got into, our first earnings cycle. So a little longer than we had hoped, but not too bad.
Yeah. Any plans to uplist?
Well, it's a very good question. As you well know, I'm sure, we're listed on the Canadian Securities Exchange. And one of the reasons we listed there is the favorable environment in Canada. And then we co-listed with the OTCQB, and depending on the U.S. appetite for companies in the cannabis space, we would consider uplisting to NASDAQ, but given the current environment for listing a cannabis company on NASDAQ, that's probably at least a year away, if not more. And that's, through no reluctance or fault on our part, but just the process to get through the SEC and the NASDAQ would, right now it would probably take you 2 years. So we're going to wait until they have a better handle on how to deal with Canadian cannabis companies that want to migrate to the U.S. I will say that unlike many of the other Canadian cannabis companies, our focus has been on the U.S., not so much in Canada. So we're domiciled in Vancouver, and we're governed by the British Columbia and Ontario Securities Commissions, but the bulk of our operations are down here in the States. So in that way, we're a bit different.
I see. So a few months back, I read in the news that you hired 2 executives from Tilray, and I can't remember their names, so forgive me, but I'm just curious, what have you tasked them with in terms of their role with Future Farm, and how do you see their expertise assisting Future Farm to meet their goals going forward?
Sure. I'm happy to give you the insight into that. The 2 people you refer to, Phyllis Vena, who's been working with us for a while now, was part of the M&A team at Privateer. And of course, Privateer is the money behind Tilray. Brendan Kennedy is the guy who built Privateer and Tilray. So we were very happy to have Phyllis come on board, and she is working more closely with us now as it relates to all financial matters. So, we're in the middle of our audit, for example, so Phyllis is managing that process for us. And I think what's been particularly helpful, based on her experience at Tilray, she's seen enough deals and enough transactions that as we look at different opportunities, she brings quite a depth of experience to the underwriting process. So she's been a very valuable addition to the team. The other fellow that we're working with, who had worked with Tilray, is a guy named Chris Lesh. Chris was their head cultivator, and again, Chris's experience with Tilray and others in the cultivation arena have been very helpful for us. So as we look at different opportunities, we're able to have Chris visit the site and, pretty quickly tell us whether or not the cultivation team there is expert or not. And believe it or not, there are a lot of people who have invested heavily in the cannabis space who don't really know how to cultivate. And so Chris has been another valuable addition to the team. But I should stress that that's only part of the team. One of the other hires that we made that we'll be sharing with the shareholders is a fellow named Tom Barrett, who's serving as our counsel at this point, but will become more active in managing the company. Tom has a background with a legal background with a very well-known firm here in the Boston area, and he's now, becoming more involved in the day-to-day operations of the company. And then we have, in addition to Tom, we've brought on a VP of Finance, fellow named Brian Kearney, who came out of the biotech industry here in Boston. So we think we've assembled a very good team. there's a lot of interest, I guess, in in the company as it relates to deals that we see, opportunities that we get, and so sorting through those opportunities and separating the wheat from the chaff is something that we have a much more sophisticated approach to now, given the team that we've built, than we had when we first started.
It sounds like it. Excellent. Two more questions, Bill. I appreciate
Sure.
you during your time. My next question is around ownership in terms of management ownership of the stock. I'm seeing that it's relatively low at 5%. I'm curious why that is, and if for any of your executives or employees of the company, are they also paid in with shares of the stock?
So to the letter of the law, the 5% number is about right. But the reality of that is that outside direct management, there's a group of friends and family that would probably bring that number closer to 10%. So now they're not deemed insiders, but they're people who have been with us from the beginning. They've not been in the market with their shares. So I think a truer number would be about 10% of the outstanding is controlled in some fashion, either by management and or friends and family. In addition to that, we have not, in some of the deals that we've done, we've granted shares as a part of the deal, as consideration for the deal. But we, from an employee standpoint, we have issued options to people, but we've not granted shares directly to the employees. So a minor distinction, but the bulk of it has been done with options. And as far as the plans going forward for that, we stay within the guidelines suggested by the CSE as to the number of options we grant. We're actually below the allowable level for options. And, sometime in 2020, we'll probably have another option grant. But again, we would stay below the level allowed by the CSE. And those options are meant to reward the team for the work they're doing. Sure, that makes sense. And can we talk about the elephant in the room, which is the share price of the stock? As you might imagine, Jaden, I could spend my entire day talking with people about the share price. Yeah. Mercifully, there were only 24 hours in a day. So I have civil discussions like this with people about the share price. Yeah. And then I have more spirited discussions with people about the share price. But I will just, a few obvious things to point out. Of course, I do serve as the CEO of the company, but I have no magical insight as to the share price and where it's going. I can tell you that I own all of the shares that I've received from the original deal we did. I've not sold any shares, and I don't have plans to sell the shares. So what I find helpful in discussing our share price is to just look at a couple of simple data points. So if you are familiar, you sound like you're a sophisticated investor, you've probably looked at marijuanaindex.com. Are you familiar with that website?
No, I'm not.
Oh, you got to go there. It's probably one of the best tools in the market. MarijuanaIndex.com. They split the marijuana market between Canada and the U.S. And there's a great amount of detail within that website, all based on either CDAR or Edgar filings. So when you look at our market cap and our share price today, as a traditional micro cap growth company, our valuation is quite low. And if you compare our valuation or market cap to some of the bigger names in the business, I'll just choose Canopy because it's a company everybody's aware of. I think Canopy, the last time I looked, was trading at a multiple of 400 to 500 times its projected earnings. Mm-hmm. And, at the same time, we're trading down at around 10 cents. And while we have not yet forecast earnings, we are building revenue steadily and will be forecasting earnings. So our market cap today is probably a more precise representation of our value or I would argue, than Canopy's market cap is. Mm-hmm. Because at those types of multiples, of 400 times or more, it's just not a sustainable position. So our view is that we have yet to realize our true value in the market. And as we inform the shareholders and the public about our revenue streams, the growth in the revenue, and ultimately we forecast earnings, we think that's what the market's waiting for. And we will see that reflected in our share price. Another observation I would make for you is that we've been doing this for a little over 2.5 years. The guys who run Canopy have probably been at it for 8 to 10 years. So they've had a little more time in the market. And it doesn't have to be Canopy necessarily. You could pick any of the other big names. And the other thing we've done, which is different, is that we've not gone out and done a large raise. We've been raising money for specific acquisitions or investments. And our theory is that from a traditional valuation standpoint, it's better for us and for the shareholders to go to the capital markets when we have a specific need, either for an acquisition or a partnership or some development activity, as opposed to going out and doing a big raise. So I think for those 3 reasons, we're comfortable where we are. And again, our thinking is that as we announce our revenues and get into the earnings forecast, we think the market will respond well to that. And basically that's over the next 4 to 8 months.
Okay. That's certainly a fair time frame for that. And as a shareholder, that, at least for me, it gives me comfort in knowing that this sounds like it will turn around. We appreciate the lack of dilution in the shares, so thank you for not diluting the heck out of it. And I guess my next question is around that. Any idea or thought about a reverse split?
No. I think as of today, we're at like 160 million outstanding.
Yes.
We have not considered reversing the company for a couple of reasons. Number one, several of the hemp projects that we're working on involve a structure that would be non-dilutive to the company. So, rather than go out and sell shares to raise the money to build out a hemp farm, for example, in Florida, we have found some private investment, some private investors who are interested in partnering with us on those assets. So, we think we can bring revenue in through the partnership where we would have we would have a controlling interest in the LLC. So we can bring those monies in, report the revenue, and yet not further dilute the company through the sale of securities for that investment. And the reason that works is that the hemp market in the U.S. right now is exploding, and we happen to be in a good position based on our experience up in Maine. So we've not looked at a reverse. I haven't researched it thoroughly, but my basic understanding is that it's seldom that the reverse ever has the intended effect. So that's something we're not really contemplating. But we are working on non-dilutive forms of financing. As I mentioned, the partnership structure on the hemp deals is one way to do it. The other thing that we're looking at is that we have a number of assets that we own outright. So leveraging either our greenhouse operation in Florida or leveraging our farm up in Maine. Both of those assets are available to us, and there would be significant loan proceeds that would come to us from either or both of those assets. So, we're going to approach it in that way, and at that point, by the time next spring rolls around, we'll be generating additional revenue from these facilities. So the need to go to the capital markets should be minimized.
Excellent, Bill. Thank you for that answer. I wholeheartedly agree with you. A reverse split would be a terrible idea, so don't even consider it.
Okay. Well, it's funny you'd mention it because I was in Chicago not long ago at a kind of an investor meeting type thing, and one of the guys in the audience kept hammering me for the reverse split calculation, and I asked him 3 or 4 times politely. I wasn't being combative, but if he could suggest to me an example of a micro cap company in the cannabis space that had successfully reversed itself, and I have yet to hear back from him. So
exactly. I mean, that, not even in, that's throughout, I think, any industry. When a company undertakes that, there's just not a good outcome for it. So Bill, you are a gem. Thank you so much for your time. Thank you for your candor. We, going forward, if shareholders need additional information or want to get a hold of someone within your organization, who would you recommend they contact?
Well, what I would suggest the best way, if you have a specific question or if people have comments or criticism of release that we do or some move that we make, the best way to get me is by email. And, we do have IR people who work with us, but just send an email to Bill, that's my first name, at futurefarmtech.com. It might take me a day or two to respond, but I will do so. It's much tougher to get me on the phone. So if you have ideas or, comments or concerns, just bounce me an email, and either I or one of the team members will be back to you within a day or so. And again, I've enjoyed this discussion. You know, it's always good to talk with shareholders, and you know, we're not just paying lip service to that. We actually respond to whatever questions or criticism we get. And we think that's the best way to manage the company, is just be open about it. So
I agree, Bill. Transparency is key. Thank you for being so transparent on the call. Thank you very much for your time, Bill. Have a great day. All right. I think Bill might have dropped off there. There you have it. A very candid discussion with the CEO of the company. You know, as a shareholder at this point, at this level, we really have to decide, is it a company that we would buy at this, you know, at this price, based on what Bill shared, and that's going to be entirely up to you. So yeah, that's a wrap, everyone. Thanks so much for watching, and we'll bring you some more interesting and compelling stories with other companies going forward. So have a great day, everyone.